Here we're going to have a look at personal taxation for the tax year 2011 to 2012. The topics we'll be covering are value-added tax, known as VAT, income tax, national insurance, capital gains tax, and inheritance tax. First of all, value-added tax. This is applicable on purchased goods and services. There are a few which are zero rated, such as some foods and drinks, excluding alcoholic drinks for obvious reasons, and some reduced, such as heating fuel tax. The current tax rate, VAT rate, is 20%, reduced rate is 5%, and obviously zero rate is 0%. Income tax. Earnings from employment, most pensions, interest from savings, excluding ISAs, which are tax-free individual savings accounts, share dividends, and rental income will all be due income tax. But there is a tax-free allowance which we're entitled to. For those under 65, we have a £7,475 tax-free allowance. So that's the first sum that we earn is going to be tax-free. Then for 65 to 74-year-old, that increases to 9,940, and up to 10,090 for those aged 75 and over. Income tax is payable on income that exceeds this amount. So above £7,475 that you're earning, if you're below 65, you will start incurring income tax. Then personal allowances will reduce where income is above 100,000. This is by £1 for every £2 of income above that 100,000, irrespective of age. Income which is between 0 and 2,560 per annum, maximum, there is zero tax on income, and there will be 10% tax on savings, such as your interest that you might be earning. For income 0 to 35,000, there will be 20% tax on income and savings, and 10% on dividends. These are share dividends. Income between £35,000 and up to 150,000, there is 40% tax on income and savings, and there'll be 32.5% tax payable on dividends. And for those whose income exceeds 150,000, there's 50% tax on income and savings, and 42.5% on share dividends. National insurance. This is in addition to the income tax we've just been looking at, and is payable on income and gives you an entitlement to Social Security and a state pension, and is paid by all employees and the self-employed between 16 and 65 years of age for men, and 16 to 60 for women, although this is subject to change. So salary between 7,228 and 42,484 per annum, you will pay employees primary class 1 tax at 12%, and there's a 2% on salary exceeding this level of 42,484. So here's a little illustration of basic earnings, and this interactive model is actually taken from their download tool from the website, and the yellow cells we can amend. But the average person in Britain is earning about £26,000, so this is a fairly typical example. And what if his salary is 26,000? What do we imagine his take-home pay will be? Well, let's just reveal this. Actually take home something in the region of 20,042, dependent on different deductions which might exist. So what we can see here is that he earns or she earns £26,000, there's a personal tax allowance of £7,475. Taxable income is the balance. So this person's paying £3,705 on basic tax. He's earning less than £35,000. There's national insurance, £2,253. We are assuming that there are no contributions to a pension scheme, which may be inappropriate in your case. So total deductions are nearly £6,000. So the monthly salary gross is £2,167. Actual take home is £1,670. We often sort of think that earning a lot more money is going to make all the difference. A 10% increase in salary, we think, well, that will make a huge difference to our take-home pay. But here we are looking at a 10% salary increase, which will bring it up to £28,600. And the net increase versus today of that is just £1,768. So not a substantial sum increased. Capital gains tax. This is due following the sale of stocks and shares, investments and unit trusts on non-primary homes, so not your primary residence. If you have a second home and you sold that, then capital gains may be due on that. However, the first £10,600 of any individual's capital gains tax is free in a year, tax year. 18% on capital gains is then paid on gains exceeding this level of 10,600 and is payable on income up to and not exceeding £53,075 in a tax year, which equates to 42,475 for the higher rate tax threshold, plus your capital gains tax-free allowance of £10,600 brings it up to £53,000. For those whose income and gains exceeds this level, 28% capital gains tax applies. I mean, this all seems quite substantial, but if we consider that 18% capital gains, there's 20% income tax for most people, 40% for higher rate, up to 50%. So capital gains is less than the prevailing tax today. Then inheritance tax, payable on a person's estate following their death, and the first £325,000 of a person's estate is tax-free. Any inheritance exceeding this will then be taxed at 40%, and a reduced rate of 36% will apply where 10% or more of the deceased's net estate is given to charity, and this will apply where the death occurs after April the 5th of 2012. And this ends this module, and in your own time please click on the next. Thank you.